Arpit, one second. Means like very nice to hear about whatever the initiative is WRC is taking. I think only one my suggestion is that there is a lot of awareness issues actually. Maybe that people are or professional in our uh, institute members are not really aware what is happening and what is. I think something it can be done through means like some of the members, some WRC members can pay visit to a lot of large corporates. Okay, so I think we can have that some awareness session. What is something institute is doing and what are the contents which are available online and everything. I think that will help a lot to have a more and more members to come and visit to institute actually.
Wonderful.
So I think that is one of my a lot of good initiative. I think that wow initiative like Friday Fundas or means like a lot of we have huge. If you are saying that 800 chartered accountants in this area, in my RPG house we are almost 50 chartered accountants sitting actually. So I think you spoke about the Gurukul as a group. We have also launched our finance academy actually.
Okay.
Where we train a lot of our young chartered accountants, where all seniors take initiatives, find some time, take time out, and means like give various kind of academic and behavioral trainings to the young chartered accountants. Actually, we are also sponsoring courses to all our uh, uh, professional friends in the group. Actually, so in group as on date, we have almost 250 chartered accountants which are working for us. Actually. So I think maybe that some of the program we can also initiate with the help of WRC.
Absolutely.
So that is something I think that is my only suggestion for having larger participation there. And thank you, Arpit. Very nice to see you. See you here. So thanks to connect again. Yeah.
Thank you so much.
Okay. So. So let's come back on our subject about that. So you know that I represent at present RPG Group actually, and I don't know if any one of you know about RPG Group. It is a group which is chaired by Mr. Harshvardhan Goenka. KEC is our largest entity. Then we got CEAT, which is tire industry, which is in tires, and then we got Gensar, which is in IT and ITS. Then we got RPG Life Science. We got one company, Rakesh, which is in manufacturing of transformers. Then we got one plantation company where we have tea plants and rubber plants. So this is all about the group actually. And
So Saregama also you have.
so Saregama Philips Carbon is something which is Calcutta. The CSC is something which is owned by brother Mr. Sanjeev Goenka. So now both the groups are have parted their ways actually. So one group which is chaired by Harshvardhan Goenka, other group is which is chaired by Sanjeev Goenka. So this is brief description of what as a group we do. It's a very old conglomerate actually, which was actually founded by Ramaprasad Goenka, if you have heard of it. So, so I think when we were talking about what are the means like some industry related thing, I thought manufacturing. No, which is more or less people. There must be a lot of it. EPC is something very niche industry where we can focus today, and very typical industry. So today we'll talk more about the EPC industry, though I tried to cover some of the aspect which is common for EPC and manufacturing sector. I tried to cover some of the general aspects, some of the specific to the income tax, some of the issue which day-to-day basis we face under for GST. So I will try to keep it as simple as possible and as practical as possible. And any kind of comments, any kind of questions is most welcome during the session. So as you know that Indian EPC industry is a backbone of whatever progress which we are seeing in India. So basically, this industry is something which is deal with the construction of highways, railways, airport, ports, power, telecom. So these are the some of the sectors which basically this industry caters. Little bit about what is that why this industry is and why it's very important in the current scenario. As you know that government uh, has given a massive push to the infra, and almost 10 lakh crore was allocated for the infrastructure sector in last finance budget. uh, there are various other programs, whether it is NHAI program, whether it is Har Ghar Har Ghar Jal Nigam Jal project actually. So where this national infrastructure pipeline project, where the huge means like expenditure it is coming in, and I think government entire target is that before 2024 or 25, now each and every house, whether it is in rarest of the rare area of the India, should be tap water should be available. Okay, so basically this programs is running by the state government with the help of central government, and order flow is such a large that even today that actually there is a shortage of pipes, there are shortage of manpower, there are shortage of the means like contractors. So even that companies are not getting enough bandwidth to cope up with the what kind of orders being getting released from the department. So one is the major this. I think other is that entire initiative of the government toward the power sector, whether it is solar power, whether it is hydropower, and so there is huge investment which is flowing from the government. So this is a very exciting time for the entire industry. You know that there are few large players in this, whether it is Larsen Toubro, whether it is KEC, whether it is various road companies, Shapoorji Pallonji, and all. There are various groups which are in this sector. So some of the issues which we discussed today about entire digital transformation in the tax administration, there are certain issues which is high ticket item for the direct tax, and some issues which are specifically for indirect tax or GST. Will try to cover in next 40-45 minutes of this presentation. So let me start with the uh, digital transformation in tax administration. I think you all will agree with me that the way we used to handle our tax, our assessment, our appeal, uh, uh, matlab, just 3, 4, or 5 years ago, today it is entirely completely different scenario. Today you go to the any of the income tax office, whether Biker Bhavan or whether you go to the VKC, all the galleries are empty. There is you hardly find any assessees roaming around in the building. I've seen my career, initial years of my career in when there is a huge long queue outside the every officer's room actually, and we used to get wait for our turn to get heard, and a lot of personal connect was there actually. Okay. So I think now the way we are handling our tax, it is completely in faceless manner. Okay. Hardly we go and meet the officers. Everything is has turned under faceless. So at present, you know that all the faceless scheme has already been notified, whether it is a faceless assessment scheme, whether it is faceless appeal scheme, whether it is all your rectification, your appeal effect, and your even transfer pricing. No, all your international tax matters are no. Everything almost has moved to the faceless manner, where you are only dealing with a black box, which is computer. You don't know who is the person other side. Naturally, they know who are you, but you don't know who are they actually. So So that is something which is at present we are experiencing. Then entire almost all functions has been moved to the CPC. All your return processing, all your assessment processing, all your demand calculations, all your refund calculations, everything is now controlled by the CPC, which is either sitting at Bangalore or sitting at the Ghaziabad. So literally the local uh, jurisdiction officer as on date has almost zero power. They don't have any unless until the case has been shifted from the CPC to their jurisdiction. They are not authorized or they are not allowed even to do anything, any tinkering with your data or with your reports. Uh, uh, as we moved in the faceless, I think we are facing more and more challenges because the data availability with the government authorities are huge actually. Means like now you file a lot of information, you file country by country report, you file CBCR report, you file all your balance sheet, all your data is available in their system. They can do the lot of analytical work. What is my margin? What is L&T's margin? What is Shapoorji's margin? Actually, the kind of questions which we get is just amazing. Actually. Earlier, we never used to get the questions. So generally, we used to get a long list of the give the debtors detail, give the creditors detail, give the expenses detail. We were also happy, and they were also happy that they are doing the assessment. Okay, but now actually we are getting the quality questions. They are the kind of question they are asking me is like why your consumption ratio is higher, why your GP margin is higher, why your sales to your marketing expenses to sale is higher as compared to the industry. Okay, so means uh, so all these kind of means like quality question which we never used to deal with actually. So a lot of cross verification is now possible because all your data as per the GSTN, your data as per your books, data as so wherever you have uploaded, wherever is the information you have filed, all being cross matched actually. Why your revenue as per 26 AS is higher or lower than what TDS you claim, the turnover which you reported in your books actually. So these kind of issues which we are now dealing on day-to-day basis. There are larger enhanced reporting requirement under the tax audit. You know that now we'll have to report the clause 34, which talks about all your reconciliation, your expenses with your books of accounts. Clause 44, where a lot of GST related information is expected. So, and as we keep on reading the newspapers, media, that a lot of agreement for the sharing of information between various agencies. Now, your information is shared with the RBI, your information is shared with the MCA, your information is shared with the GSTN. All these agencies are talking with each other. And I can tell you there is a coordination committee between all these ministry officers. They sit periodically, very regularly. They discuss your cases. They discuss. It's not like that something today is going in income tax, it will not get affected your GST and GST issue or something which is going in GST, it will not get affected. The day you get the notice for the GST, you can expect that sooner or later the same question will going to come from the income tax authorities also. So similarly, and that is the resulting in the regular surveys, like the kind of flooding of the notices under 133(6). Similarly, if you talk about indirect tax, you know that the kind of data which is available in GSTN is huge. Actually, it's a humongous data which is available with it. You won't believe the kind of analysis they come with the industry. So whenever we get the notices sitting in our offices, we are also amazed that how can they get this kind of information? So just one single example I give, that suppose your material was moving from X factory to say Y place, actually Y customer places actually, and in between there are 20 or 10 toll nakas actually. they get the information at out of 10 toll nakas, if your vehicle has not moved to the from the two toll nakas, you can expect there is a notice is going to come that actually the goods has not moved from A place to B place. So these kind of information means like these kind of data which sitting in our office we also don't know actually. So this is what happening on the ground. Actually. So that is what means like I mentioned that tracking of the goods through toll booths. You must have heard that pilot project is going for the geotagging of all your premises for registration. Earlier, you used to give the one address. Nobody, there was no physical verification whether the place is there, whether that place is not there. Actually, you people used to get registered under the fake addresses. Now, I think that is also being tightened. Uh, there are a lot of means like drive against the fake purchases, fake invoicing, which all round tripping of the invoices, which you must have keep on hearing in the media actually. Uh, as officially last week's CBC chairman, Mr. Jory, which has officially quoted that they have already identified that 63,000 crore worth of GST, which is involved in the fake invoicing, which is actually which they were till date they have caught actually. So I was talking to one of the CBC member actually. So according to government estimation, if everything goes right, actually, whatever the transaction which is happening in the Indian economy, their monthly collection should be more than 4 lakh crore of GST. And at present, their monthly collection is 1.6 lakh crore. So you can see even after so much of tightening, still there is a parallel economy which is running actually. And whatever the collection means like which we are seeing or which we are reading actually, that is one is because of a lot of the entire means like market they are getting tightened actually. So lot of compliance requirement they are formalizing the economy actually. So though there is a lot of buoyancy in the economy, but largely also region of that one by one they are closing the doors for all tax evasion mechanism.
So may I ask one?
Yeah, please.
We hear often this GST, fake invoices news in the news articles. So one is if the seller pays a GST to the government and the buyer takes input credit, so definitely from the point of view of the income tax, the expense has not occurred, but we are taking the allowance of that. So that is a one aspect which is a kind of you know prompting government to take action on these cases, or there is any other angle to it?
So let me just one aspect may be right, maybe that what is the loss to the government actually, even if there is a fake transaction actually, okay, I invoice to you actually, and we actually don't have the supply of goods or services actually. It's just a paper transaction. I am sitting with some credit actually, okay, and I passed over that credit by raising a fake invoice. Okay, I have paid the tax, whatever the credit which was available, and that credit suppose has come to a genuine source actually, but I am not able to utilize that credit. So I have raised a bill on you and I have passed on the credit which you can utilize for your future business. From one point of view, look that there is nothing wrong in that. Okay. Something this government is not at all loss actually. Something which is already paid to the government, that credit was only. But see the entire the structure which government has designed actually. Some credit which is available, some credit which is not available, some credits are restricted credits, some industries are allowed for refund, some industries are not allowed for refund. Theoretically, suppose there is a real estate developer who is not able to utilize the credit because he doesn't have that much of output liability, so he is sitting with a huge. We'll discuss this inverted duty issue. This is a very large issue for EPC industry also. And today I start monetizing that credit by doing the fake transaction actually. Okay, that is something which is not permissible, or that is not something which is defeating the entire purpose of GST. Okay, so I think we have to look from this fake, and that is why this last year there was a specific amendment which was made in the GST law, that any supply without any billing without supply and any supply without billing, both are made a criminal offense actually. Okay, so if you raise the bill but there is no supply, underlying supply, that is also crime. If you have supplied the good but there is no underlying billing, that is also crime. Okay, so we'll have to look. We'll have to see this fake invoicing entire. So what is happening in that? Lot of this circular trading actually. A will bill to bill B, B will bill to C, C will bill to D, D will bill to E, E will bill to F, and F will again bill to A. In the entire process, everybody is paying the tax. Everybody is reporting that invoices in their GST. But ultimately, whether it is a healthy practice actually. So, and because of all these practice, the genuine taxpayers who are government is not getting the revenue, and that burden is getting cross charged, or means like cross subsidized to the genuine taxpayers. So then I think that is why in industry we are experiencing now, means like there is huge, means like there is a tax inspection and investigation. There is a very regular affair now. It was never, we have never seen this kind of scenario where every month, means like if you are registered in our company like us, which is registered in almost every state, every now and then sometime some investigation is coming in Sikkim, sometime coming in Assam, sometime coming Rajasthan. So each and every time, and because now you are dealing with the entire supply chain actually. So if in the entire supply chain, if there are 1% of the vendors or suppliers or your customers who are non-compliant actually, but in that circle, in the vicious circle, everybody get suffered actually. And as you have seen that a lot of means like the arrest power, which is they are left and right using for any kind of this. I don't think whether it was in service tax or whether it was in VAT scenario, the tax was not. It was a civil liability. Now it is almost means like for every offense it is a kind of criminal liability.
Thank you, sir.
So these are the means like general aspect from the industry perspective. Largely, we have discussed about the faceless assessment and appeal. Only thing is that CPC, I don't know, means like you guys are also experiencing, or your whenever you are dealing with your clients, how you are dealing with issues at CPC level. Huge issues. Still, that CPC is not aligned. A lot of old demands which are already sitting in the system, they are not able to rectify it. If you go to AO, AO is completely helpless. He will raise his hand that I can't do anything because I can't even, I'm not allowed to enter into that. I can't even log into that. I can only view the screen, what is something which is available on the screen. I can't do anything. They keep on raising the ticket. There is no solution actually. Most of the things, it takes years and months to get those things rectified. Okay, if your genuine refunds are there, but there is a fake demand which is sitting in the system, they will automatically adjust in, and you don't have no way to get it corrected. There is no communication channel as on date available where you can go and represent actually. Okay, so this is a very large issue. Still, there is an amalgamation issue where company A merged with the company B. Okay, maybe the situation that entire credit sitting in company A PAN number and demand is sitting in company B number. There is no way that as on date government could find that how to club both the things and issue the genuine or correct demand or correct refund to the, and people have to run left and right to the high court to get all those things sorted out actually. Similarly, I think since faceless assessment, we have experienced that appeal disposal has slowed down actually. There almost last 3-4 years. Literally, there is no appeal disposal is happening. All CITs appeal. I don't know what they are doing it. Uh, so, uh, so wherever there are few cases which are available in physical, you can go, you can pursue, you can require, do some personal, make some personal rapport with the officer, with CITPL and get your order done. But in case where you don't know whether this, where is that your appeal is sitting actually, whether it is sitting with CITPL sitting in Chennai, or whether it is sitting in Jaipur, or whether it is sitting in somewhere in Arunachal Pradesh actually. So uh, God knows actually. Yeah. But only thing is that all most of the Bombay cases are in South. So I don't know what technique they have developed actually. So they have given they have allotted the cases not in the same zone actually. If you are assessee of say Maharashtra, or your assessee or your PAN number is registered in Maharashtra, you can exclude the entire Western region. Your Rajasthan, MP, your Gujarat, any of these officer will not do your case. You can presume that your case is either with somewhere somebody sitting in either in Punjab somewhere, or not even Delhi. So even means like metro to metro also they will not allocate. So you are in set. If you are in metro, most likely your case is in some city in Punjab, or in South. Mostly cases are either in Chandigarh or cases are in Chennai. So let us talk something specific about EPC contract. Okay, so as you know that EPC is basically erection, procurement, and commission. So what typically we do as a EPC industry? So 90% of our business is government contract. Same with all EPC contract, not only with my company, whether you talk about L&T or whether you talk about any road contractor or infrastructure, J. Kumar and everything which you see on the road section. Whether they are doing the metro construction, whether they are doing the electrification, whether they are doing the power work, or maybe that telecom infra, or maybe that airport developments. So most of these contracts are through the tender process. Tenders are released. Okay, when then there's a bidding procedure where you can bid for the project. You have to be technically and financially qualified for bidding the project. There are pre-qualification criteria, which we call it typically PQs. If you are having the sufficient PQ, you can bid for the project, and there is a proper means like analysis of all the bids, and then that is how the L1 and L2, which is declared actually. If your price is lowest and you are technically and financially you are qualified, then you can expect that project is get awarded to. So typically the in every contract you have a suppose you are doing a theoretically you are doing a project which is metro construction, say in Delhi, in Bombay actually. So what are the basic work which is available? There will be onshore supplies, where the some of the products, some of the goods which is available in the means like in your indigenously. Those are the goods you have to supply. Maybe that say tracks or signal system or whatever it is. Then there will be offshore supplies, where some of the product which is not indigenously available, or you feel it is more cheaper than import, that then you call it a offshore supply, which is your import. Then there are onshore services, means like all your services which you have to typically do on the site, whether your construction, whether your engineering, or whatever it is. And then offshore services, there are services which you do, means like you import the services. Similarly, similar kind means like when you are doing the project in say overseas country actually. So there may be project exactly the same way. What are the activities you have to do at the local site project, and all those onshore and offshore. Uh, Typically, the contract will be designed in whether it can be split contract or it can be composite contract. So, split contract means like whatever the attributes I gave you, those are in the contract itself. You have a separate value which is assigned for the onshore, separate value which is assigned for the offshore, separate value which is assigned for the services, separate value which is assigned for the supplies actually. So that is something which we call as a split contract, or it can be composite contract where the entire it is a turnkey contract. So they will say that you have to come and you have to set up this substation. No, means like it is only that the client will only give you the location and space actually. Otherwise, everything is all inclusive, whether it is engineering, whether it is supply, whether it is construction, whether it is erection and everything, and commissioning. Okay. And one composite price is decided actually. Then it is your choice whether you want to load more in the supply, whether you want to load more in the construction portion. That is also something which is very scientifically we'll have to do, and there are a lot of permutation combination in that probably we'll discuss that. Okay, so that is what I mentioned, that allocation of the contract value when it's a composite contract, then primarily you consider that how your cash flow will work. Means like if you are doing the project in overseas countries, whether the repatriation is available from those countries. If the repatriation is a problem, then probably you would like to have a more and more profit loaded in the supply so that you don't end up having profit in local country. Like this problem happen mostly in the African countries. Suppose if you do some project in African country, whether it is Ghana, Kenya, a lot of work is going in those countries. Huge funds are coming from the international funds in those countries. But the fundamental problem there is that you can't repatriate the money. So that is where means like more and more price you try to load on the supply portion, because supply portion is generally it is money is remitted directly to India, which is in dollar terms. For construction, consideration is generally in the local currency. Okay, so similarly, you have to see what is your foreign currency risk actually. If you better you play with the dollar terms rather than getting the money or consideration in their local currency actually. And then again, definitely we'll have to also consider the transfer pricing aspect, because most of the countries now having a very robust transfer pricing regulation, and every country would like that reasonable and appropriate share of the profit is shown in the local country actually. So these are the some of the very basic EPC contract structuring related tax related issues on EPC contract structuring. So generally, projects are large projects are generally done under the SPVs actually. Most of the project actually, any project if you presume it is anywhere above 1,000 crore, generally it will not happen in a company actually. So we'll have to enter into a specific SPV. Generally, client will prefer that you come with a special purpose vehicle for the project, and where there should be a proper means like support from the parent entity. Second, all
What
those
is the reason?
as on date we are sorry.
What's the reason for structuring it that way? What is like the
So basically, there are two aspects. Is that one is that all large project actually. Okay. Number one, the kind of India is still lacking a lot of technical strength actually. Okay. So you have to have some partner which is either from China, from Russia, from US, or from Japan actually. So who are sitting with the very means like robust technical technology actually. So that is one aspect. Second thing is that risk aspect. So suppose means like I talk about like AEC actually, which is my company. Okay, our ticket size is maybe we always target project between 500 to 1,000 crore actually. We do the means like lower value project also, but we don't do any project which is below 200 300 crore actually. Our minimum ticket size is minimum 200 crore actually. But maximum size will be 1,000, 1,500 crore because we can't go beyond that because it's a carry a huge risk actually. Suppose something happens in the project actually. Okay, if project is not delivered on timeline or project is stuck because of some reason actually, some political uncertainty, anything happens, at least it doesn't affect the entire viability of your organization. That is why most of the large project generally it is done under the JVs actually. So maybe that it is good from the client aspect also, because they don't want to rely only on the one contract. They are giving a contract for say some hydropower actually, say for which is say 3,000 crore. They would not rely on only one party which is for the entire project actually. They want there has to be some sharing that in case one partner fails actually, that project can be get completed by the second partner, second JV partner actually. So, so that is why it means like projects are generally in the SPVs. One is because of project condition, because client need there is a need from the client like this. Second thing I talk about the PQs, which is generally it is not available with the with the one of the only one party. And then what could be the legal structure of that? So legal structure, you have a, you can get into a EOP, you can have a LLP, you can have a partnership firm, you can have a corporate structure. Okay, that all depends on your commercial understanding with your JV partner. Generally, most of the projects are under EOP structure because wherever you have a overseas or foreign partner, even presuming that Indian partner, generally nobody prefer the corporate structure because one is that the winding of the corporate structure is very difficult. Okay. AOP is something different. Is that where two partners comes together, they enter into AOP agreement, they enter into JV agreement. That you execute the project get over, you get the completion certificate from them, then you don't have to do anything, and that it get automatically dissolved. But corporate structure is something which is there is a permanent marriage actually. Yeah. So then there are a lot of taxation issues regarding EOP structure actually. So some of the contract may be that each and every partner's share of work is clearly defined in the agreement. Some of the client may allow that partner to bill directly to the client actually. So suppose there is a project between where A and B is partner, and there's a project owner, which is we call it a client actually. The client may allow that, though that for the entire project A and B is jointly responsible, but their areas and risk and responsibilities clearly defined in the agreement. And A is allowed to bill directly to the client, B is allowed to bill directly to the client, and whatever work A does, they take the money. Whatever work B does, they take their money. But those are something very typical. Very few contract it happen. Largely, client will recognize only the EOP structure. So there will be one lead partner who will be responsible for entire execution, procurement, and commissioning actually. But from client perspective, they recognize only EOP. They recognize only the structure who is legally, and then it is between the JV partners to align with each other how they want to allocate work and profitability between themselves. Okay, so as you know that EOP as on date, EOP is taxed as an individual. So as I think you must be aware that, and earlier that EOP tax was tax rate used to go almost 42%. So we, as an industry, we represented law to the government that this is not EOP. This is not something which is a high income earner where you are targeting actually. It is means like unfortunately this is something which is missed out. Fortunately, last year I think they have corrected that partly. They have said that in any AOP where only companies, corporates are partners, the tax maximum this surcharge will be applicable 15%. So for applicable tax rate for AOP is around 35.88%. But still it is very high for the as compared to corporate, which they pay the 25%. Yes, please.
As you said, normally you prefer EOPs in this kind of bidding structures, but it's highly tax inefficient compared to a corporate with more than 10% tax difference. So just because of the winding up advantage, people still prefer an EOP over a company.
No, yeah. So sometimes means like tax is part and parcel of the entire structure. Actually, means like your decision may not be always tax driven, but there are ways and means where through which we manage our affairs. Actually. So generally, what we do actually, that's a practical thing. We don't keep any profit in AOP. So AOP is something which suppose I have presuming that I have entered. I've got means like one project which is I have bid with XYZ partner, and the project is allotted to us, and project is given to us. So theoretically, say project worth of 2,000 crore, and as per the commercial terms agreed with the between the both the partner, both will do the 50% work. So 1,000 crore worth of work for partner A, 1,000 crore of work for partner B. Okay, one way is that entire profit we book in the AOP, and the AOP pays the tax, and whatever the profit which remains after tax get allocated between the partners. Then once the tax profit is taxed at AOP level, then there is no further tax in the hands of the partner section. But generally we don't do like that. Okay, what we do that AOP then generally subcontract the work to the partner section. Okay. So there will be a contract between client and AOP, and there will subsequent contract between AOP to the back to back. Okay. So where there we pull the entire profit. So my 1,000 crore of work I will do from my company, not from AOP. Okay. So whatever the profit which is my entitlement, that I will book in my corporate structure. But from client perspective, AOP is everything actually. So it's like the billing will be from partner to the AOP, then AOP to the. So there will 4 levels. There will be contractor who will working. So I will give the work to some external, some subcontractor. Yeah.
The same thing cannot happen in a private limited structure. Same thing, back-to-back contracting.
That can happen. So
we achieve 25% tax rate.
That can happen.
Something is there behind.
That can happen generally. As on that, what we have seen that Indian tendering terms doesn't allow the corporate structure. Okay, so most of the contractors, so you can come as a AOP or you can come as a firm actually. I don't know what is the reason actually.
LLP, sir.
LLP are allowed. LLPs are allowed. Yeah, LLPs are allowed. So I don't know what is the reason for that, but I have not seen any project where we have entered into where we have formed a company, and because you know that there are a lot of other aspects with the company. You need to have director, you need to have the registered office, you need to have a lot of compliance issues actually. Okay, so generally from both perspective, whether from contractor perspective as well as from the client perspective, I have not seen, even the same with the overseas contract also. We have not seen any means like with a lot of project in SAARC, we Africa, Americas, Middle East. I don't think we have got any contract which is housed under a corporate structure. So you're right, in the same 25% I can achieve in that company also. But I think this is not something which is very widely used. Actually. Yeah.
So just extending your answer to his question, like contracting from AOP to the corporate and not keeping or giving a negligible profit in AOP. So won't department come with that is GAR, right, saying that you are planning in such a manner wherein this will be termed as an impermissible avoidance agreement, something.
So that is something which is means like most of this is widely used structure actually, okay, and this is a structure which is completely business arrangement actually, okay. So this there is nothing which is intended to save the tax actually, okay. So probably GAR should not be there, but there is a slight risk in that because if you say that today it was the rate difference is around 8% actually. Tomorrow government may come and that say that the profit on which you would have paid tax at 33%, you are paying tax at 25%. So your entire intention is just to avoid the tax actually, and just to reduce your tax burden. Similarly, now this 35.88% rate is no. Earlier the rate was 42%. Okay, so the rate was 25% versus 42%. There's 17% gap actually. Okay, and nobody earns that much of profit in EPC contract. Means on the face of you must be presuming that all these EPC companies are earning huge. It's a very thin margin business actually, because huge lot of competition actually, lot of competition, and lot of means like execution risk, delay risk. Okay, your means like payment risk. Government will not release the payment. Government will not give you access to the roads actually. Material is not available. Workers are not available. The biggest risk is your manpower is today actually. You then don't get the means like workers. The situation is that गाड़ियां भर भर के मतलब भेजते हैं उनको वर्कर्स को लाने के लिए, भाई आ जाओ आप काम करने के लिए. Situation is like that. Very difficult to means like so why these projects are getting delayed actually, means like if you see Bombay, means like years on years project चलते जाते हैं, खत्म होते ही नहीं. क्यों नहीं खत्म होते? Because मैन पावर नहीं है. Wherever you need 100 people, you get only 20 people to work actually.
So then how do you deal with escalation clause here?
So generally escalation clauses are inbuilt in the contract actually, okay. Depends on the commercial viewpoint actually. Sometime when we feel that commodity prices are already peaked up actually, and I get the contract on today's price actually, and if the commodity price goes down, then I get the additional margin actually. Sometimes we don't get into that means like escalation clauses actually. Sometimes we feel that it's better to means like have the means like safety built in for the escalation. Okay. But again, escalation is something which is number one. Each and every contract they will give the escalation only for the quantity which is determined at the tender stage. They will give escalation only for the period which is defined in the contract. Okay. Suppose if the period is at 30 months of your project execution, and if you have taken say 42 months for execute the project, the 12 months whatever the losses because of escalation that has happened, that will not be reimbursed to you. Okay. Even suppose you say that I will consume 500 tons of steel in this project. If you consume 600 tons, for 100 tons they will not give any escalation. So it's a highly technical, very means like determination. What is the quantity you are going to consume? What is the value should be there? Some of the contracts have the typical means like escalation clauses. Some of the contracts may not have like that. And all these contracts are generally, these are the as is varies basis. You can't say that I want escalation clause. If you want to do work, do. Otherwise, there are a lot of पूरी जनता पड़ी आपको. Even you don't have the means like situations like that, you don't have any right to comma full stop भी करना. Their contract is defined actually. So this is the contract. Whenever they issue the bids come actually, after the bidding process, there is a window of 3-4 weeks where you can keep on asking a lot of questions. You can take the clarification. All those clarifications are actually written confirmation. You send them the queries, they will answer you the queries in writing, and all those correspondence are also part and parcel of the contract.
So are there bribes involved in the tendering process?
So bribes in the sense, I would say that at the time of tendering, it is not there now actually, because most of the contracts are now online. Okay. Now you don't have any physical tendering process. Okay. Each and every, as per the government policy, now you'll have to submit your bids online. Okay. You can't means like get access to what X person has bid, what Y person has bid. Maybe that इंटरनली भी 4 कंपनी कम टुगेदर है, उसको बोले तू 100 में कर, तू 105 में कर, तू 110 में कर, तू 120 में कर, 4 कॉन्ट्रैक्ट में तो एक तेरे को मिल जाए, एक मेरे को मिल जाए. सो ऑल दोज काइंड ऑफ थिंग्स आर still possible, but in the current scenario those are also very difficult. That used to happen some point of time. But definitely once the contract is awarded, there are a lot of issues in getting clearance certificate, getting your work certificate, getting your payment released, getting the quality certificate. Then तो फिर सब कुछ वो project manager के हाथ में मतलब.
Probably it would relate into delay only, no sir. And if the delay is there, you lose on those extra escalation का जो period है, you never get paid for that.
So typically जितने भी बड़े contract होते हैं, आप समझ लीजिए means like there will always claims and counter claims. Okay, means like hardly there will a contract which will end in the way it should have ended actually. Okay. Maybe that there are delay from the government side, there is a delay from the contractor side, both will be blaming each other. Somewhere at end of the project, both the parties sit together, compromise actually कि ठीक है मेरा क्लेम 100 का है, तुम्हारा क्लेम 200 का है, मांडवाली कर लेते हैं, तुम 50 और दे दो, काम खत्म. So we do the contract costing also like that.
Cash flow का problem नहीं आएगा.
Cash flow for the larger company there won't be any problem because there will be a lot of project actually. Okay, and but those contractors who are doing one of the project, they may have some issues actually, because like if we talk about my company KC, at any point of we must be doing almost around 400 projects actually, at any point of time. At any point. So we are doing almost 150 project in overseas location and almost 250 project in India, whether it is railway project, whether it is transmission project, whether it is civil project. So generally cash flows are matching. One important aspect is that as soon as you sign your contract, almost 20% of funds is given in advance. So that is why your cash flow, if your project is efficiently managed, there cannot be any cash flow.
And that's a standard clause in
That's a standard clause. That's a standard clause. Mostly
industry standard है सबका.
Industry standard. Industry standard. So means like as soon as you sign the contract, there is a mobilization advance, which is almost 10% of your contract. All your supplies are advance paid. So what remains, we have to consider cash flow, which is my construction portion. So that is why I mentioned that the allocation of the price cost between the supply and erection and commissioning is very important. And we try to load and more on the supply. So any project, if you say if it is a 30-month project, actually, generally project are 30 months, 36 months, 42 months like that. Okay. Most of the supply get completed within next 1 year, first 1 year. So after that, it's only erection work. Okay. So generally cash flow is not a big issue.
First year without an agreement.
Yeah, first year means like within first 12 months, we get almost 60% of our contract value. So though it is not like that we everything is kept because we have to pay to suppliers also. Because if we have billed to the client, we have to pay to suppliers also. So generally, if the project is say 15% margin, typically supply portion will have 25% margin and supply erection will have almost at par. So what are the profit which we have to earn, we already inbuilt in our supply. So coming back to on that, as I mentioned that AOP tax is at 35.88%. There is a lot of restrictions for the payment to the AOP partners actually. So there is a specific section 40A which we say that any payment of salary, commission, fees from AOP to the AOP partner is not allowable expenses. Though there are a lot of legal precedents on that. in case the AOP incur any losses, naturally that losses will not get transferred to the AOP partners. Those losses become the kind of permanent loss. Then there will be active partner, there will be passive partner, means like maybe that one partner who is the only name lending partner, that I am coming with you only to give my name so that you meet with the qualification criteria, but I don't want to take any risk of the project. So project is something all risk and responsibility with the lead partners. Okay. Then whether tax credit for foreign partners, suppose some Chinese partner or say some Japanese partner which is executing project with you, if there's some taxes are paid in India and his share of profit, tax on his share of profit, naturally because it's a separate legal entity, generally that credit is not available to them. Then taxability of supplies, there are a lot of issues on that, whether that supplies are mainly in the overseas project, whenever you are doing the project overseas actually, what is the profit which is attributable to that home country, whether it is only construction profit to be means like allocated to the home country, or whether supplies which is happening from overseas portion, that is also to be taxed in those countries. So there are a lot of issues on that. A lot of countries have their different position. Okay, India also we have a lot of cases on that here. Back to back we discussed as you questioned that in the case of back to back contract to the JV partner, definitely GAR is a bigger issue. We'll have to see if there are any cases on that. TDS is something big issue, because if you don't keep any profit there actually, but client will deduct the TDS on the entire consideration, and what happens is that against your profit, your tax liability will be very minuscule, but your TDS will be huge actually, and you end up paying huge, you end up taking huge TDS refunds actually. Okay. Typically 197 application are also tried. Somewhere you get, somewhere you don't get. Similarly, GST is again a larger issue, because ultimately AOP has to bill to the client, so entire GST has to be paid to the by the AOP. So there is a flow of credit from the partner to the AOP. Then yeah, so sometimes there is a huge timing mismatch issue, because AOP is SPV, they doesn't have any other project. So maybe that when the liability is there, you don't have the credit, or credits is there that you don't have the liability. So those are the aspects which we'll have to very carefully handle, that there should not be any excess credit which is available, then it may become a permanent loss kind of thing. Then talks tax overreach and disregard. A lot of countries which are still where we don't have very robust tax administration, mainly African countries, even the SAARC countries, maybe a lot of, I can tell you that India is the best country for the tax administration. So you have a robust assessment system, you have robust means like appeal system. It may take time, but ultimately at some level you get the justice. Okay. But in a lot of countries you don't have any kind of, means like whatever that first level pay, whatever can be done actually. Sometimes they will come with some means like exorbitant, very absurd kind of demand that, and you don't have any means like procedure that you can go to the appeal. First you have to pay, then you go to appeal. पे कर दिया तो एक बार वो पैसा कभी जिंदगी में आता नहीं है. Like once it is gone to the government accounts, you presume that it is permanently lost actually. There is no way that money can come back to your in your hand. So specifically from overseas contract, a lot of the kind of with the globalization and Indian companies going and doing the projects in overseas countries. Definitely, whatever you may have the branch model, you may have the company model. Okay, you may suppose I get an order say in Dubai, I can set up a company in Dubai who can do the project. I can set up a branch in Dubai who can do the project. So there are a lot of legal structure which is available. Also depend on the country to country. We decide whether to what structure is more suitable to us from both from the taxation perspective as well as commercial perspective. So naturally, FTC, which is whatever tax which you pay in the local host country, if it is a branch, then you are entitled for foreign tax credit actually, which is section 90, 91, rule 128, and you also have to see the TT provisions. So there are certain issues like some of the countries means like they have a typical withholding taxes provisions actually. Like if you I give an example of Bangladesh, which is very developing country as on date. Lot of work which is coming into Bangladesh. Actually, they are spending left and right on the infrastructure development. So typically, Bangladesh means like the banks are responsible for ensuring that proper tax is withheld. Actually, so any money which is going, you can't take out any money out of Bangladesh other than the local through the local bank. And the banks are made responsible that whatever the money which is getting out of Bangladesh, the tax is withheld on that. Okay. So it's not like that. It is not at all possible that any money it can come. They don't consider what is the TT provision, what is the domestic law provision, what is the, and then question comes that if suppose you have done some supply, okay, so you have say you have sent some transformers. There's a typical AIT of 7.5% there. So whatever the money you get actually, generally they deduct 7.5%. Now, as per the treaty, the supply is not taxable in Bangladesh. Now the FTC provision says that tax credit will be available on the doubly taxed income actually. It is not a doubly taxed income because it is not taxed there actually. Whatever the tax which we have paid in that country, as per the law, you can't get the credit of that. So those are the something which are the additional.
9.5% is with the bank, and it's not even a tax that they should have
So
collected.
generally, all these are. See, there is no fun for them also because we built in the tender pricing. So nobody will pay from their own pocket actually. So means like all these are mental blocks actually that we have taken
That's a credit in your name in Bangladesh.
It is,
and it could
yes,
keep on
yes.
building up because
Keep on building. So they have typical provision that you can claim the refund when your branch is closed or your company is closed, and but generally that doesn't happen actually.
So liability आती है बांग्लादेश में कभी to just pull out this credit.
Liability आती है because that is why means like that is why I said that EPC industries you have to pay your taxation planning has to be very robust actually. How you play with your numbers actually. In this typical kind of situation which I mentioned, okay, the more and more profit you leave in that country, your utility of their credit is more actually. Okay, so suppose that tax rate is at, I think Bangladesh is now 30%. Okay. So if you book more profit there, so there will be more local liability. The more local liability means like that profit is also taxed in India because it's a branch structure. Then whatever the tax which is withheld, actually you can use for pay off that liability, and you can take the credit in India. So that is one thing, and the second thing is something which we know widely use this Reliance judgment. At least whatever the credit which is not available or you're not able to utilize, at least you can claim as a expenditure actually. But I don't think this Reliance judgment is going to sustain in Supreme Court actually. Sooner or later is going to get. It is going to have the same fate like what Sesa Goa for education says.
We have that gross up wala part in that agreement that any taxes to be paid by that client only, irrespective whether it's 7.5 or 30.
Income tax generally they don't take any responsibility. A lot of projects come with the VAT exemptions.
VAT exemption.
Yeah, so a lot of project which is generally when it is say funded by JICA or funded by IMF or some agencies, in that funding agreement they put a condition that you will not levy any indirect tax. So it should be custom free, it should be VAT free, it should be excise duty free. So all those benefits are generally available through the means like funding arrangement. But income tax nobody will take. So generally, or maybe that some of the special exemptions are given for some of the project where means like any kind of technical consultancy fees or design fees on which they provide specifically in the agreement that there won't be any tax. Okay. But whatever the profit which you earn, so there is no exemption on two aspects. One is your profit on tax, second on your pay tax. Pay tax means like whatever the employees which you deploy there, on their salary tax naturally has to be paid. Yeah. Similarly, I think BPRT means like a lot of most of these almost every country have, barring few countries, this branch profit remittance tax. Some of the countries have a provision. Then, whenever the money is remitted, the tax is paid at that point of time. Some of the countries have the provision that tax is paid on the accrual basis. So, as you earn the profit, you have to pay the BPRT. Whether you remit the money or you don't remit the money, they are not concerned with that. As on date view is that the BPRT is as good as dividend actually. So if you set up a company, if that company give you a dividend, the dividend is taxable, and whatever tax is paid out for to earn that dividend, generally credit is available. Similar position as on date we are taking for BPRT, but still jury is out whether it is a correct position or not correct position. There are different viewpoint. Somebody says that it is not available, somebody says it is available. At least at present we are claiming, let's see, whatever. As we discussed about few countries, typical taxation. Bangladesh has 7.5%, Nepal has 5%, which is 1.5% plus 3.5% withholding tax on the total revenue. Again, there is an issue on the credit, which we already discussed. A lot of issues on the assessment and appeal, because when you do the project, naturally you have to file, you have to comply that local tax filing requirement. As we have assessment here, the assessment happens there also. Maybe that assessments are may happen very late actually. It may take 4 years, 5 years. by the time if there is any liability in those years, there is naturally the issue of how do you claim the credit of those tax which is paid on the assessments actually. And I think we already discussed about allowability unutilized FTC as expenses. Yeah, so we'll quickly wrap up actually. Merger and amalgamation, as you must be aware that Section 72A, which talks about the tax neutral merger and acquisition, that is not that is applicable only to the manufacturing sector and certain sector like banking companies. EPC is something which is not regarded as a manufacturing business. So even if you two company merge, that benefit Section 72A is not available. That is why you don't see a lot of consolidation in EPC industries actually. So this is something which we are already pursuing with the government, that now there should be means like parallel treatment between the manufacturing industry and the service sector. Quickly on this SCP, as you know that now SCP provisions are well coded in the law, where any payment which is exceeding 2 crore per year or any number of users which is more than 30,000, that SCP provision get triggered. And once the SCP provision get triggered, then you are presumed to have a economic presence in India. So earlier it was we are all only used to talk about the physical presence. Now we talk about the economic presence. So though you are not physically present in India, but you are economically you are present in India. So once the SCP provisions trigger as per the income tax law, section 9, then naturally that how much is that profit attributable out of that, what are the payment you made to the overseas party, that is still not clear. We have a specific rule 10 for the attribution of profit, but very general rule, which is there is nothing specific in that rule. Okay, SCP provision as on date, wherever the TT benefits are available, you go by the TT provisions. In that case, Act provision doesn't apply. You go by the P regulations, permanent establishment rules as per the TT. And if the TT is attracted naturally for TT, the another issue which is going to come right from 1st October is huge issue is going to come of the Form 10F actually. Because once now the 10F has to be online uploaded. Most of the foreign party, they would not like to have the PAN in India. Once they don't have the PAN in India, they can't upload the online 10F. Once they can't upload the 10F, then you are out of the treaty.
There is an exemption for the foreign entities. Would that get
So
extended?
that exemption is only available up to 30th September. So government kept on extending the date for actually, but as on date situation is that exemption is only up to 30th September. Okay, once the 30th September passes, and then in case 10F is not, the party is not able to file the 10F online, they are not willing to take the PAN card in India, then what happens actually? Suppose you are remitting some funds to China for the supply of goods, or say supply of the service actually. You are importing some technical services actually. And that Chinese party doesn't want to take a PAN card in India. Now they are out of the treaty actually. Now if that they are out of the treaty, then you have to fall under the act. Now once you fall under the act, then first you have to see the SCP. Whether it falls under the SCP limit. If it falls under the SCP limit, then it's a business connection. Then it's a business income in India. Okay, the tax rate is 40%. And the liability for tax deduction is on the payer, not on the payee. So it's a huge issue as on date. There is no clarity as on date. Otherwise, also now earlier the rate of withholding tax was 10%, now it is 20%. So otherwise, also 20% instead tax rate plus 18% GST plus gross.
Explanation to this 20%. Basically, it was never proposed in FA. Finance Act में propose नहीं किया था, and suddenly Finance Act में डाल दिया. So the intention of jumping from 10 to 20 is not known to the whole India.
So those are the policy matters actually. Okay, you have to live with that. Okay, so means like most of the time you don't get any logic.
Not treaty because more benefit.
What was the logic behind bringing that TDS on goods? क्या मतलब what is the
94
194Q.
194Q? What is the means like what logic? The kind of explanation they given 194 are so absurd. It is so difficult to means like implement those. Means like you do lot of conferences, you do lot of marketing activities. उसमें किस पे 194R लगाना है, किस पे नहीं लगाना है. Your entire means like bandwidth goes into doing all those work actually.
The company does 194 hours, so have you come up with some FAQs कि ऐसे ऐसी चीजें ऊपर से ऐसे taxes deduct करना?
So practically most of the we have our own we have formed our more SOPs for compliance with the 194R actually. But again, those are the judgmental call. Lot of judgmental call. As on date means like sometimes we go aggressive, sometimes we go conservative, sometimes we don't want to take a risk. We take the tax liability, whatever that. No dealer. If I am sending some dealer to say Singapore as a incentive for achieving the sales target, he is not going to bear the tax of that. We'll have to gross up and we'll have to pay for tax for that. So that is which we discuss about 10F. Okay, so still we are waiting for further clarification whether this 10F continues, the existing provision continues, or the date will further extended from 1st October. But if the date is not extended, it is going to be a big issue for the all corporate sector. So this is what we already covered. Quickly, some GST related aspect. So generally, for I covered only EPC related. There is no point in generalizing that. So, so I think July 22 up to July 22, there was a rate structure was all government contract was taxed at 12%. Railways was taxed at 5%. Railway was taxed at 12%. So means like first January 22, part of the rate they converted from 12 to 18%, and then for railways and in July 22 they converted from 12% to 18%. So as on date means like it is generalized rate of 18%. Very few type of contract where this is still 12% rate is applicable, but those are very specific contract where earthwork is there or like that. Solar still there is a blended rate of I think 13.8%, which is 70% is treated as a supply and 30% is treated as a services. It is a presumptive bifurcation, and that is how you get a weighted average rate of 13.8% on the solar project. Most of your input either at 18% or 28% because cement is something which is a very large consumption item where the rate is still 28%. So you may have end up situation where your input is generally very high. So on an average, typically your input is on your project cost is around 16 to 17% on a weighted average rate. Okay, if your rate was 12%, then naturally there was a 4 to 5% kind of inverted duty structure. Though it is not there today, but still most of the EPC companies are sitting with a huge credit. Okay, and because for last 5 years we have kept on accumulating the credit actually. Unfortunately, refund was available. The refund was available only for the goods, not services. You must be aware of that. Matter went all the way up to Supreme Court, and Supreme Court upheld that though it is an anomaly, but this is a policy decision of the government that refund will be available only for the goods portion. Now they have subsequent and Supreme Court recommended to the government that that anomaly should be looked into it. Now they have amended the formula, and now the partial credit of services is also available. So, but still, past credit issues everybody is struggling actually. There are situations where in one state you are doing the project, so there is a huge credit shortfall. Then because of timing issue or because of nature of the work which you are doing in those projects, in some of the state where you are doing project more largely which is inverted structure, like in some state you are sitting with a huge cash flow, in some state you are paying huge cash GST actually, and there is no mechanism, as you know, to transfer credit from one state to another. Now they are allowed to transfer only cash balances. So if there is any GST cash balances there, now you can transfer from one state to another. Only CGST portion, not the SGST portion.
So cash balance and excess paid.
So cash balances generally happen because in all government contract there is a 2% GST TDS. Okay, so typically, as I told you that in typical EPC contract, your input and your output. Input is always higher actually. Okay, so otherwise also your credit is in excess of your output liability, and on top of that there is a 2% GST. Okay. So that GST is generally the cash GST, though it is refundable. So either you go for the refund, you go file for the refund. Refund takes its own time. You know all the refund, how the refund comes in India. Means like you have to do a lot of pitch, you have to do a lot of administrative adjustment, and there is always time cost and money cost involved in it. So now at least now they have allowed that whatever the cash balances which is sitting in your CGST account and IGST account can be transferred to the other state. So So that is one of the good actually. So at least you don't have to rush for the refund. Wherever there is a excess available, you can transfer to the states where GST cash outflow. And it happens like in some of the railway is something which is it was always 12%. So so your credit was always higher. So in some state you are doing more railway project, then you have huge credit. In some project, in some state you are doing more transmission project where rate was always 18%. So then you may cash GST shortfall, balance shortfall in those countries. SPV, we spoke about SPV. As you know that SPVs are specifically for that project. If you are, is there any excess credit available in that SPV? There is no way you can take refund of. If in the company scenario, if there is a excess credit, you can expect that whenever new project come, you will be able to utilize that credit, and you will, there may be time value of money, but still there is no permanent loss. But in SPV, there may be situation that SPV, one typical problem come when the advance comes actually. So whenever you say typical, suppose you signed 1,000 crore contract. As per the contract term, the moment you sign the contract, there is a 10% advance. Say 100 crore, you get the advance. But at the time of advance, there won't be any cost actually. You would have not incurred any cost. It's just a signing fees kind of thing. So you would pay that GST in cash actually. But whenever the credit comes, because your future billability is reduced to 90%. Okay, so whenever that you have the liability, the credit was not there. But when the credit is there, you don't have the liability actually. So in that situation, there may be end up situation that you may have some credit accumulated in the SPV scenario actually. Again, means like GST on advances, which we discussed, cash flow issue with the government. Most of the government client doesn't pay on the GST on advances actually. As I told you that you can't do any comma full stop in government contracts. Whatever it is there. So if they say that we will pay, we will not pay, will not pay. So the contract terms is that advance will be without GST. Even if the contract is silent on that, generally they don't pay the GST on advances actually. Then you will have to pay from your pocket, because as per the law, supplier is liable to pay the GST. Whether recipient pays or not pays, it's a different condition. We have discussed that the taxes or advances collect credit not available to receive. Again, advances, though you are liable to pay the GST, but credit is not available to the recipient on GST paid on advances. 2% GST is applicable on payment from government client, and there is a huge reconciliation issue because GST TDS return does not provide that information on invoice level information. Because suppose if you are doing work for the power grid, actually power grid, you may be doing 20 projects for the power grid. You don't know that generally their payments are released from one centralized location. Then you don't know which project they have deducted TDS and which project they have paid actually. So somehow all these are generally guesswork. In totality, we just reconcile that what is my total collection, what should be my TDS, and what is TDS which is sitting in the system actually. But as on date, government has not provided any facility to have the invoice wise TDS.
I didn't catch that. Could you try again?
I think that was the last slide. Thanks. Yeah. Any questions?
Can you share some of the experiences where where the authorities have asked you that this particular project is giving us say 15% of the margin, while you are showing this particular project as at a loss? How you kind of manage those kind of questions, a tough question from the authority, because that happens we actually work on a thin margin in a EPC industry, but sometimes you'll find that some project is giving good profit.
So generally that challenge comes, one is that project which you are doing in overseas countries actually, because there you don't run that number of projects. Suppose in any typical country you must be doing 2 projects, 3 projects, 4 projects max to max actually. Okay. And in those cases, that project-wise profitability is directly visible from your P&L account. So one is that. Second thing, wherever you are doing the project in SPV actually, their project-wise profitability is directly available from the contract. But all other projects, generally we don't disclose any project-wise profitability. So it is global basis, generally they track actually that if total EPC industry average profit is say 8%, then why your profit is only 4%? So those kind of questions may come actually. Sometimes they do ask for the project-wise profitability. So again, the project-wise profitability, there is a lot of common cost which is there in, because everything is not linked to the direct to the project. Actually, there will be a huge cost which is HO cost actually. So that cost, how do we allocate to the project to project? That is also some internal working actually. So generally we maintain the project-wise profitability because from commercial MIS perspective, but typically those are not shared with the authority. Sometimes we may have to share the project-wise profitability in transfer pricing. Okay, when wherever there is a payment to your subsidiaries or payment from your subsidiaries or your AEs actually. In those cases, we may have to do that. So typically we do a lot of tax structuring actually. So sometimes we set up a specific arm in overseas entity and we take the project and then outsource to that entity. So those are the typical tax which we play around. Yeah.
Thank you.
So as far as construction companies goes, so you would have booking the net profits of percentage completion method.
Yes.
Correct. So your P&L won't be hitting the credit side from gross sales or turnover during the years of construction. So at the time of filing LDC under 197, the LDC talks about gross sales, gross turnover. Since you are only getting advances, so you were able to get 190C on that advances also.
So generally percentage completion outplays actually. So percentage completion is your turnover is based on your cost.
Right.
So suppose your project cost is say 1,000 crore and your contract price is say 1,100 crore. Okay, so the way you keep on incurring the cost, though there is a typical accounting standard norm that you won't book the turnover till incurring minimum 25% cost or minimum 10% of the project actually. So as soon as you keep on doing that, you keep on booking the turnover also, which we call AS7 adjustment. Like,
but so you will be receiving that advance receipt as soon as you sign the agreement, right?
Yes.
So on that, you won't be getting 197 because since it is just an advance and it has not been a gross receipt or sales, we go by having a verbatim representation of 197 wherein directly it talks about the way. So, able to get 197.
Yeah, we are able to get. Generally, we'll have to go with the contract. We'll have to show that contract to them that this is the total my contract value for the first year. I may do the 25% work actually. So this will be my revenue. This will be profit. But because of advance, my TDS will be huge actually. Okay. So which will so you go and explain to them. Generally, LDCs are allowed actually. May not be full LDC, but 70-80% kind of relief are generally. So maybe because against 2% they will give for 0.5%, 1% commissioner to commissioner. But generally LDCs are given if you are able to give the proper explanation. Yeah.
Just to add, sir, advances are a part of what I'll be booking in the future.
Correct.
So we try to propose that way only whatever has happened during the contract, and due to Ind AS will not impact my 197. The rate what you're giving me is the rate I'll be deducting on even advances, order, billing, whatever you tell me.
Yeah, but 190 doesn't talk about
Advances, but it's a part of your contract. Advance is a billing which will come up as a part of your 30%, 40%, 30%, whatever is there in the AS. So they say that we've tried to put it across that, it is a part of this. This is not something which is coming out of the box. It's not like an escalation clause comes out of the box. It is after all the negotiation has happened, a court order will come and then you charge. Uske liye alag se 197 lena padta hai.
So generally 197, whenever you apply, you just say that this is my likely profit this year actually.
Estimated.
And again, TDS is, you all also have to keep the provisions of section 199 in also in mind actually, because even if that advance your TDS is deducted, generally you claim the credit of those TDS in the year in which the revenue is accounted for it. Okay. So advances as such should not have any impact on your 197, because you will go and say that my total tax liability say on my revenue, because entire revenue is TDS deductible. So you will go and say that my total tax liability is 0.5% of my revenue, but my TDS is 2%. So give me that. So 199 also is a big problem for EPC industry, because for each project, how much revenue is accounted for, how much TDS is deducted, then you will have to how much has been advanced, how much has been adjusted. You will have to do a lot of arithmetical calculation, and then you have to claim the TDS credits. Okay, anything else? Thanks.
Just one question, if
Yeah.
I may, relating to global tax, since KEC is present in a lot of countries, and you even have a subsidiary, if I'm not wrong, in US.
Yes, we have.
So, since you would have worked with the tax laws of those countries, and as you mentioned sometime back in the seminar, that India's tax administration is better than most countries. So, just if you could, if possible, give a couple of examples of what the other countries are doing and compare and contrast with what India is doing right. Because we hear a lot of negative things, like India hasn't done this thing right in tax laws, India needs to change this, India needs to change that. But hearing something that India is doing good in tax administration compared to other countries, that's something that normally don't hear.
So, so two aspects in that. Some of the countries which are still underdeveloped actually. Okay, for EPC industry, that is those are the countries where the money lies actually. Okay, you get a lot of work in those countries. Your company already developed है, वहाँ पे you don't get contract actually, right? You get the contract only जहाँ पे, means like presume whenever the Ukraine is to be rebuilt actually. That is your hope, that whenever yes, it's like whenever this Russia-Ukraine war is settled actually, a lot of project will come from Ukraine actually. And it has to come actually, because the entire country has to be built. So in those countries, the tax administration, one is the means like corruption is means like unimaginable kind of corruption, because you can presume if India is 20% economy is black, their 200% economy is black. So you can't get anything.
Majority are devastated by this corruption.
Yeah. So huge corruption. So huge poverty, one. Huge corruption is another issue. You can't do anything. All of a sudden they will come, and that will very absurd demand actually. Either you have to settle with them then and there only, or if you want to have a legal fight, okay, I will not say nothing doing, whatever demand you do. I will pay the demand and I will fight in that. I can tell you, means like there are countries which in the Supreme Court order they write the countries first. In the Supreme Court order they write that country's interest is first. Forget the what is law. So those are countries are also there. We deal with those kind of countries. So that is why tax administration is means like most of those countries are hopeless. Simultaneously, if you look at the countries like European countries, whether you talk about Germany, whether you talk about Netherlands, whether you talk about other European countries, you talk about US, Brazil, all those countries, the tax litigation is very remote actually. Okay. They will always be very aggressive in the tax demands, but they are always ready and willing to discuss and debate and compromise actually. It is not like that they will issue the demand that you pay the demand, pay the means like fight in appeal. There are cases where we take the time from them. We discuss on the MS team meetings. We discuss on the Zoom that this is what their contention, this is what our contention. They would say that you should have paid taxes at the margin of 12%. You would say no, my margin is 5%. We negotiate. We discuss that comparison on virtual mode only, and then finally they settle that okay, let's close at 7%. So those are the situation also. Okay. So there they don't want that at 12% will issue the demand and then you have to pay it. They are not so adamant. So it's like mixed kind of scenarios are there. Yeah. Okay. So thank you.
Thank you so much. I think we all have enjoyed the session today. Sir, your entire presentation was also so detailed, and with your immense knowledge and experience also, we have all been enriched so much. On behalf of everybody
Thank you.
present here and on behalf of the institute, I propose a very little vote of thanks. Request you to carry on the round of
more participants, but it's always nice to be whatever we can share to our esteemed organization, this CA Institute. Always happy to be part of it.
Thank you so much.
Thank you.
So we shall break for